Hello, this is Richard Posson for the Posson Report. It's May 6th, 2013, and this is an update of the super cycle for the stock market. We're using the cash Dow index going back to 1885. And on a cyclical basis, what we've seen since the 1930s is that during, say, about 1932, there was a 216-year super cycle bottom triggered by a 72-year cycle, triggered by a 36 and a 9-year and a 3-year, and then it just goes all the way down into short-term cycles of a day or something like that. They all come to confluence to trigger this 216-year cycle bottom, which that cycle probably spans 180 years to 230 years for all I know. So the 216 is just basically a label. Now what this creates, however, is the true 100-year bull or bear market. And basically this cycle was saying the bull market will be up until the 2030s to perhaps as late as 2042, which is the latest we're using at this time. Now this is all calculated from a top in 1835 for the stock market and from the bottom of the stock market probably 1932. Then we go inside of that for smaller cycles to help time when this will actually occur. And like I say, it looks like 2030s out to about 2042 for a super cycle top. Now, along the way, we've seen some other trends. We had a 72-year cycle top back in the late 60s. Some can argue it was in the 70s. And then it came down into a 36-year cycle bottom in the 1970s. Let's see if we can kind of zoom in here a little bit, pick up the scale. So there's your 36-year cycle bottom. Now, you can see the market rallied up and basically came into the 2007-2008 top and declined into the 2008 to 2009 bottom, depending on what index you're looking at, what country you're looking at, because you will find the whole world kind of works in the same fashion with similar timing. And it declined into a 72-year cycle bottom. Now, 72-year cycles should create a 70 to 90% crash in the stock market, and it did that for Russia and some other countries. But I started warning in 2005 that when the crash would come, we would manage it so it would only trend or act like a 36-year cycle, which is only about a 30 to 60% decline, correction, crash, however you look at it. And if you look at your index charts, that's just what has occurred, that the statistics did change, they were altered, and due to how we managed our economy to keep us from an actual depression. Okay, what is our forecast for the future? Well, this 72-year cycle should be up out of this cycle bottom into a 72-year cycle top. This is the final leg up of all the super cycles, 36-year, 72-year, and the 216. This suggests the Dow could trade as high as 30,000. On this chart, which I set this up years ago, I kind of took a chance it would go no higher than 20,000, that we were going to see some stalling out. We could still see that eventually, that the stock market runs into a difficult time with higher inflation, rebuilding the middle class, and it sees higher costs to do business, and there's just less left over for investors. So the stock market could actually stall out eventually here and slow that performance. But right today, May 2013, the stock market is doing really well. A lot of people have been caught behind. And what we think is going on is there's a 9-year cycle that's going to trend this stock market higher into 2017 to 2019. There probably will not be a recession until about 2019 to 2021. So we think it's just a bull market. Now, we've allowed as high as 19,000 for the bull market this decade, and as of last week we even heard of some people like Ralph Alcampora offering 20,000 by 2017. We already know of many others who are offering 15 to 17,000. Even as of today, they're looking pretty smart. The bears have got a real problem here, that they've been left behind, been off the mark. So at any rate, I find this very interesting, that we're in a 100-year bull market and it's going to come in just about 100 years. I do think this next 20 or 30 years is more oriented towards higher inflation, higher interest rates, a higher dollar to keep up with the interest rates, and the interest rates will basically be higher to keep up with inflation so inflation doesn't get too out of hand as far as its net impact. And we're still going to have a growing economy, higher real estate, higher commodities, and a higher stock market. Thank you.